Hello and welcome to our weekly Market Roundup, your one-stop source for the latest in global market trends, key economic insights, and top financial news. I'm your new host, Adam, bringing you the highlights and the happenings from around the world. Let's dive into the numbers and stories that moved the markets last week. This week, global markets took a fascinating turn. U.S. and European stocks saw a surge, thanks to rising optimism around China's game-changing stimulus plans. And get this, Japan's Nikkei absolutely rocketed, smashing past decades-old highs, all thanks to a weak yen and explosive export growth. But here's the twist. While stocks were flying high, oil prices took a dive, as concerns around global demand clouded the horizon. And with the U.S. flashing some shaky economic data, there's a real question hanging in the air. Can this upward momentum really last? Let's unpack the details. In the U.S., stock markets tiptoed higher. The S&P 500 nudged up 0.3%, while the Nasdaq gained 0.8% thanks to a tech stock rally. But here's the thing. Behind those gains lies a layer of doubt. Investors are holding back as some surprising economic data falls short of expectations. Even the Dow Jones, which climbed 0.6%, can't escape the sense of uncertainty that's creeping into the market. Is this just a minor hiccup, or could it signal bigger concerns ahead? Despite weak industrial data across Europe, markets rallied on optimism around China's stimulus package. The stock's Europe 600 rose by 2.3%, while Germany's DAX jumped nearly 5%, fueled by hopes that China's actions will have a positive spillover effect. Over in France, the CAC 40 wasn't far behind, rising 2.1%, powered by its luxury goods sector. And Italy's FTSE MIB cruised to a 1.3% gain, thanks to a strong performance from its banking sector. The rally, however, feels fragile, given the lack of underlying economic strength in Europe itself. Meanwhile, the UK's FTSE 100 saw more modest gains, rising 1.1% as inflation worries continue to weigh on investors. Japan's Nikkei 225 isn't just having a good week, it's having a record-breaking one. The index skyrocketed nearly 5%, reaching levels not seen since 1990. What's behind this surge? Investors are banking on a weak yen and the explosive growth of export-heavy sectors like technology. And with China throwing more fuel on the fire with its latest economic stimulus moves, this rally shows no signs of slowing down. But the big question, how long can this historic climb last? China is grabbing headlines with some jaw-dropping market moves. The Shanghai Composite shot up a massive 12.8%, and the CSI 300 spiked by 15.7%. Meanwhile, Hong Kong's Hang Seng Index rose by 4.2%, boosted by a strong showing in property and tech stocks. Beijing's aggressive stimulus, including mortgage rate cuts, has been the talk of the town. But here's the big question. Will this be enough to sustain the rally, or are we headed for a cooling off? In the currency world, small moves sometimes reveal big trends. The USD JPY crept up by 0.74%, driven by higher U.S. bond yields and Japan's steady commitment to loose monetary policy. Meanwhile, the GBP USD edged up 0.75%, landing at 1.034, and the EUR USD posted a minor gain, closing at 1.12 as inflation in the Eurozone took a slight dip. But are these subtle shifts just the beginning of more dramatic currency moves in the weeks ahead? Over in the commodities market, oil prices stumbled this week. WTI crude fell by 2.74%, down to $70.27 per barrel, while Brent crude dropped to around $72.86. The culprit? Slowing global demand, especially from China, and rising U.S. inventories. Meanwhile, gold prices ticked up. In the U.S., it was all about confidence. Consumer confidence, that is, and last week it took a hit. With jobless claims on the rise, adding to concerns about the health of the economy. With the Federal Reserve already cutting rates by 50 basis points the previous week, The market is now on edge, speculating whether more cuts are on the way. Will the Fed continue to ease monetary policy if the data remains weak, or will they pause to assess the impact? Investors are anxiously watching to see if this is the start of a new round of rate cuts. Across Europe, PMI data is painting a troubling picture. Manufacturing in the Eurozone is struggling, and Germany, the region's economic engine, is in the worst shape it's been in 5 years. The services sector is slowing down too, and fears of a recession are beginning to loom large. To make matters worse, the word stagflation is starting to creep back into conversations. Over in the UK, the manufacturing sector remains in contraction, while the services industry, though still growing, is losing steam. With inflation concerns and weaker-than-expected industrial output, the UK faces growing uncertainty about its economic future. Japan's economy is sending mixed signals. The Tokyo Area Core CPI, a key inflation indicator, slowed to 2.0% year-on-year in September, down from 2.4% in August. Meanwhile, the Jibun Bank Flash PMI showed the private sector is still growing thanks to the services industry, though manufacturing hit a bit of a bump. And with Bank of Japan Governor Kazuo Ueda signaling that loose monetary policy is here to stay, it begs the question, how long can Japan ride this wave of controlled inflation and growth? China's central bank, the PBOC, is pulling out all the stops, with fresh stimulus aimed at stabilizing the shaky property market and boosting domestic spending. But here's the kicker. Despite these efforts, industrial profits continue to disappoint. Can Beijing's latest moves truly reinvigorate the economy, or are we in for a prolonged period of sluggish growth? The stakes are high and the world is watching. Keep your eyes on these key data points this week, as they could be game changers. In the U.S., we've got JOLT, ISM manufacturing and non-manufacturing, ADP employment, factory orders, weekly claims, and the job and unemployment report from the Bureau of Labor Statistics. Over in Europe, watch for the UK GDP and CPI data from Germany and the Eurozone. In Japan, the Tankan Survey and Service PMI could give us fresh insight into business sentiment. And in China, keep an eye on the NBS and Caixin PMI and the potential impact of the national holiday. Each of these could shake the markets, so stay tuned. That's a wrap for this week's Market Roundup. Thanks for tuning in. Be sure to subscribe and hit the bell icon to stay updated with the latest market news and analysis. Until next time, stay informed and stay ahead. I'm Adam, and I'll see you next week.